All right, back to the RBA's rate cut, but now we're going to hear the views of one of the economic eggheads at Australia's biggest bank, and that's Commonwealth Bank senior economist Belinda Allen, who it's fair to say has probably had a busy couple of days analysing not only the RBA's decision to cut rates, but also the wage price data which dropped earlier today. So we're very lucky she could spare some time for us. G'day, Belinda. Welcome to the Savings Tip Jar.
Thanks, guys. Appreciate you having me on today.
Two pretty big economic releases coming through in the last couple of days, and I'm sure you're all over it, Belinda. But before we launch into it, do you have a savings tip for us?
I'd love to share my savings tips. I've got two. So my first one is I'm a big fan of offset accounts. So
Nice.
Generally the way we've set up our finances is to put every spare dollar we have into our offset account. But I'm also a mum to two girls, 9 and 12. So my other tip would be getting them to understand how to budget. So they are a big user of a product where they can have their spending money, but also a stack account and put money into savings. So my other tip is get kids involved at an early age in looking at their funds, and that's been a great evolution for their financial well-being.
Two very good tips, and I have to say I totally agree with those. I'm a big fan of the offset account myself. And as for my son, he's only 19 months old, so probably a bit too early, but I do have a little spreadsheet set up for him already.
I can't say we've actually had an offset account tip on here before, despite all our guests. The offset account's the first one that's come up. It's good.
Yeah, right.
Nice and unique.
That's surprising.
Excellent.
Okay, so the RBA, speaking of what's probably not so surprising was the decision to cut. But obviously, in the sort of the rhetoric that they used afterwards, was there anything sort of you could read between the lines there that maybe did surprise you?
I think their overall level of confidence this time around, I feel like looking at all the RBA meetings over the course of 2025, I feel we've had a couple of different RBAs over this year, whereas today it felt the most confident and comfortable they've been around the interest rate outlook and around the inflation outlook. So we kind of started the year, they were very reluctant cutters. If you remember back to February, May, they cut again. July, they didn't cut. And then August, obviously on Tuesday, they're confident inflation's coming back to the midpoint. They seem like they're happy to continue this cautious and gradual easing cycle. So I think that was the big surprise, is that I feel like we've now got the real RBA standing up and telling us how they feel about the outlook.
Yeah, for sure. It seems like a couple of new staff members, obviously new Treasury Secretary coming into it. And then, that's kind of changing the conversation around that too. And then also the addition of posting who is in support of a cut or who's in support of a hold or whatever. Last month in July, it was 6-3, and you called it correctly this time. It was a 9-0 unanimous decision. What do you make of this publication of the kind of voting count?
It's new. I think we're all, as economists, learning how to look at that data and read that data. Obviously, the first time we got that was in July, and seeing that split vote, I think was actually good to see that there was this genuine debate around the board table. Like, I think it'd always been a little bit more opaque as to how the Reserve Bank board came to their decisions. So having this voting split, I think, helped reinforce, I guess, the independence of those board members. But then at the same time, when the decision is as unanimous as what it was, it gives us confidence around the reasons why they cut, and also thinking through now about the outlook from here, what to judge about what may drive them to cut interest rates again and what factors we may start to look into it. So as an economist, I always want more data. So this is just another data point to look at for the RBA.
Yeah, when I shared your RBA preview report with the team beforehand, there was a fair bit of surprise around the office. Some people are thinking, I think there'll surely be a couple of them reckoning that they'll keep rates on hold. But you're right. You called it 9-0 sweep in favour of a cut. But as for your forecast for the rest of this year, you're saying there'll just be one more cut in November. What's stopping the RBA from cutting between now and then?
Yeah, it's a good question. It would just be being stopped by the economy, in effect, performing as they expect. So at the moment, we've got inflation moving back down to 2.5%. That's occurring as expected. The labour market is holding up relatively well, so the unemployment rate is 4.3%, around where we in the RBA are expecting the peak to be. So there's no reason for them to move off the course of this quarterly casual or cautious easing cycle. So what would make them cut earlier would be a surprise to that. And when I think about what data could really surprise them, it's going to come down to the labour market. So when we talk about why would they cut in September, the next board meeting is on the 29th and 30th of September. We get 2 labour force prints between now and then. It would be a shock move higher in the unemployment rate. That's kind of, for me, the one thing that could see the RBA cut earlier. So unemployment rate currently at 4.3%. If it gets closer to, say, 4.5%, then you start to think about earlier rate cuts and more rate cuts.
And I think too, Belinda, maybe the AFL and NRL grand finals, all the board members have one eye on that rather than cutting the cash rate. And then November as well is historically a pretty popular time to cut. The infamous Melbourne Cup cut. I think we have some data tracking that around 1 in 7 rate cuts or rate movements in the past 30 years has been in November. So
it's a really interesting point though, because for those people who maybe don't follow the RBA as closely as we do, they moved the timing of their board meetings quite a bit this year. But the one thing they didn't change was November. The first Tuesday of November, we still have a meeting, and obviously that's Melbourne Cup Day. But the other point about November, which makes the RBA more likely to move in November, is they just have their forecast refresh as well. So every quarter, the RBA refreshes their forecast. So that's February, May, August, and November, which is generally why the RBA moves in those board meetings, because they have the most up-to-date view on the outlook from the staff there.
And I suppose too that they don't want to do any cuts in December closer to Christmas for fear of putting coal in some mortgage holders' stockings. My next question for you, it's around the post-meeting press conference, and it seems like yesterday there was a growing theme and a growing number of questions around the whole productivity sort of conundrum. And then Bullock's comments, essentially, to me, they said that it kind of hasn't been inflationary the way that they expected it to be in terms of like wages growth adding to inflation despite lower productivity. What do you make of Bullock's comments around that?
Look, I listened to that press conference from start to finish, and I think half of those questions were on productivity, which is obviously a really important topic for the Australian economy. So the reason why it came up so much yesterday is the RBA downgraded their view on what productivity is going to do over the next couple of years. So in effect, we've been in a pretty bad productivity environment for the last couple of years. So they've lowered that assumption. So it reduces demand in the economy and supply. So in effect, how much we can expect to grow as a nation is now lower. It's around 2%. So that's one part of why it got so much attention on Tuesday. The second part is, as you say, we haven't seen weak productivity and inflation spill over to the labour market. So we're not seeing excess wages growth, and that's helped bring inflation down. And there's probably just a bit more looseness in the labour market than what the official data is suggesting. So we can kind of see that in our internally generated data here at CBA. We think the number of people actually changing jobs has fallen quite a lot. And that old theory about you get a big pay rise when you switch jobs is generally true. So there's been less turnover in the labour market. That's bringing wages down despite the unemployment rate remaining historically low. So I think that's feeding into that story about no excess wages growth despite pretty soft productivity in the Australian economy.
Yeah. Now, just finally, Belinda, we'll touch on wages growth for a second. Do you think it's still sort of like a really good measure of measuring wages growth? Because as you said, like when people are changing jobs, they change ostensibly for a bigger pay rise, first and foremost. But you said that kind of dynamism in the market is kind of maybe dying down a bit. What are some other measures of wages growth, and what should we look out for?
Yeah, it's a good question. So there's a number of different ways we can look at wages growth or income in the Australian economy. The wage price measure we got out on Wednesday measures getting paid more for the same job. But we can also look at just broader income. What's household income doing from both wages and salary? So are you working more? Are you generating more income because you're working more hours? You've moved from part-time to full-time. So we like to look at a broad suite of measures. And I think that's probably the better focus about what it means, particularly for the consumer spending outlook, what it means for the Australian economy more broadly. So I think they each have their role to play. And on that, we know household incomes improving. We're expecting the consumer to keep spending more as the year goes on. And that means a brighter outlook for the Australian economy next year.
All right, that's really fascinating insights, Belinda. Thanks so much for joining us and sharing your thoughts with us on a very busy couple of days for you. And we hope to see you again on the Savings Tip Jar podcast.
Great. Thanks very much.